The cryptocurrency market in 2026 has been defined by selective asset decoupling. While Bitcoin has spent recent weeks consolidating, trading relatively flat, an older platform has quietly executed a massive breakout. Zcash, trading under the ticker ZAC, has experienced an explosive multi-month rally, surging past $600 mark and significantly outperformed Bitcoin. The sharp price appreciation has caught many market participants off guard, given that privacy-focused assets spend years under intense regulatory pressure. And today, we will break down the fundamental factors behind this movement. We will look at what Zcash is, analyze how it competes directly with Bitcoin as an alternative store of value, highlight the loudest voices making the project, and evaluate whether this outperformance is fundamentally sustainable or a temporary market anomaly. To understand Zcash's modern resurgence, we must look at its core cryptographic design. Launched in 2016, Zcash was built to solve a primary limitation of traditional public blockchain: the complete visibility of transaction history. While Bitcoin is often called anonymous, it is actually pseudonymous. Every wallet balance and transactional relationship is recorded on a transparent public ledger accessible to anyone with an internet connection. Zcash involves this by using an advanced branch of cryptography known as zero-knowledge proofs, specifically ZK snarks. This technology enables the network to verify that a transaction is completely valid without requiring the sender to reveal their identity, the recipient address, or the specific amount being moved. Crucially, Zcash uses an optional privacy model. It features transparent addresses or T addresses, alongside fully encrypted shielded addresses or Z addresses. This dual structure gives users the choice to maintain total confidentiality or use fewing keys to selectively share transaction data with regulators or auditors for legal compliance. Zcash shares a significant amount of structural DNA with Bitcoin, as it was originally developed from a modified fork of the Bitcoin source code. Like Bitcoin, Zcash has a hard cap maximum supply of exactly 21 million tokens, making it fundamentally immune to arbitrary supply inflation. It also relies on a proof-of-work consensus mechanism and follows a programmatic halving schedule every 4 years to reduce new token issuance. However, Zcash competes directly with Bitcoin by acting as a private store of value. As blockchain surveillance and analytic tools became more sophisticated, transparent public ledgers exposed corporations and individuals to competitive risk and financial tracking. Zcash offers the absolute scarcity of digital gold but adds the protection of financial confidentiality. Furthermore, recent data shows that Zcash mining models operate with significantly higher power efficiency compared to Bitcoin's infrastructure, offering an operational cost advantage for miners dealing with rising energy rates. The recent market momentum behind Zcash is supported by highly visible market figures and institutional shifts. One of the most prominent advocates has been BitMEX co-founder Arthur Hayes. Hayes has publicly disclosed a long position in the asset, warning short sellers and projecting an initial price target of $1,000. On the institutional side, investment firms like Multicoin Capital and Digital Currency Group, or DCG, led by Barry Silbert, have maintained strong backing and vocal support for the asset's privacy narrative. This support is further amplified by Grayscale's investment, which filed an application to convert its Zcash trust into a spot privacy coin exchange-traded fund, or ETF. This move has signaled a serious attempt to bridge the privacy asset class directly into traditional regulated financial markets. To evaluate if this outperformance is actually sustainable, we must look at both the structural catalyst and the underlying risk. The primary fundamental driver of the recent surge was the official closure of the 2-year US Securities and Exchange Commission investigation into Zcash Foundation, which ended with no penalties or enforcement actions. This legal clarity effectively removed a massive multi-year regulatory overhang. At the same time, a severe supply short squeeze occurred. Roughly 30% of all circulating Zcash is now held in shielded pools, significantly reducing the available liquid supply on open exchanges. However, there are substantial risks to consider. The ecosystem has experienced internal development friction at the electric coin company, leading to the departure of several core engineers. While the network remains structurally sound, losing key human capital creates a long-term execution risk for a complex update like the network's Upgrade 7. Furthermore, analysts warned that the explosive price action was heavily driven by thin exchange liquidity and short squeezes in the future market, rather than a massive expansion in daily active user growth. Zcash dramatic outperformance against Bitcoin shows how quickly a dormant narrative can return when regulatory clarity and supply shocks collide. The removal of the SEC investigation, institutional backing, and a restricted spot market supply created an ideal environment for a major breakout. However, long-term sustainability will depend on the project's ability to retain technical talent and translate this in speculative momentum into actual real-world utility. Thank you for watching this objective breakdown, and if you appreciate clean analytical content without the market hype, please consider subscribing to the channel. Share your thoughts on Privacy Coin in the comments below, and I will see you in the next video.